Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The markets are down today. We've lost about 25% of the gains we saw yesterday. The Dow is down about 100. The S&P is down 10. The Nasdaq is down 7, but actually the Nasdaq is doing pretty well still for the year. It's actually up on 2018. Now, in today's Technically Speaking post, Lance Roberts, the chief strategist for Real Investment Advice, asks, is this correction over? Now, let's take a look at where the S&P is now compared to its historical trends. Now, when you start back in 2009, when the bull market began, and set the trend line along the lows, you can see how overbought the market really is. Even if you set the trend line for the accelerated bull market, which started in February of 2016, which is this purple line here, you can see that the bottom is right around 2,600. So when you consider that we hit a high of about 2850 on January, it should have not been that big of a surprise that we had a correction pulling us back to the 2600. Although the media acted as if it were a major event, it wasn't. In fact, the market has not even reverted back to the long-term moving average. And Lance believes that the correction that began last week may not be over, but his strategy: use this current rally to rebalance portfolio risk, adjust hedges, and raise some cash. Don't panic, but don't be lazy. This is a crucial time, and you have to stay on top of the markets to see what you need to do next. Now, in our last report, we talked about the Index of Small Business Optimism from the National Federation of Independent Businesses. This came out this morning. This is based on a survey of NFIB members asking questions about their plans to increase employment back into the company and their expectations of the economy. The index climbed 2 points to 106.9 in January. That number actually is a jump from December when it dipped, and it is higher than the 105.5 that was expected. It's just behind the number that we saw in November, which was the second highest in the survey's history. And when you take a look at some of the specific issues, these are the 10 questions that they are asked. There were improvements in plans to make capital outlays, raise inventories, current job openings, and actual earnings. However, plans to increase employment were as flat as was the expected credit conditions. And higher sales and current inventory, well, they actually dropped in this survey. The business owner's main concern: finding qualified workers, even more than taxes and regulation. The taxes and regulation, of course, not as much of a concern thanks to the tax bill. And finding qualified workers, well, when you've got a 4.1% unemployment rate, that's not too surprising. But that's it for now. Thank you so very much for watching. Please remember to follow us on Facebook and Twitter and YouTube. Catch our past reports at realinvestmentnews.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.